So you started to scale without the banks, essentially.
Yep.
Uh,
A new investor, before they even have their first deal, is worried that, oh my God, I can only get 5 mortgages
mhm,
and then I'm stuck.
yeah,
And I remember everybody saying, like, well, don't worry about that because once you get to that point, you're going to be in a completely different situation.
mhm,
Um, yeah. And here we are now, we have 10 active rent to owns,
mhm.
right? So we kind of just blew by that. And
Hey, everybody, welcome here. I'm excited to share tonight's summer series. This is number 2, and we're going to be talking about how to scale without the bank. Many real estate investors, especially when they're starting off, start getting into trouble getting more mortgages. Either not enough cash or they can't get more mortgages. And that's a problem for growing and aspiring investors, because if you caught the bug like I did many years ago, it's like, this is fantastic. How do I keep growing? And every investor at some point in their career, if they're growing or wanting to grow, will hit a wall where the banks will say no, essentially. And so there are other creative ways in which you can grow and scale your portfolio without using the traditional banks. And I'm not even talking about using the B and C lenders here. I'm talking about other creative ways in which to grow your portfolio. So last week we talked a little bit about how to do no money down deals. And essentially what we're doing is we're building on that. So the topic here is how to scale without banks. I'm gonna summarize these no money down deals in the first one. I'm going to talk about how to scale them. And third, I'm going to bring in one of our students, Dave Shimko. He's joining us tonight, and he's going to share his experience. And it's just awesome hearing other people's experiences that have also gone down this path, and primarily doing creative deals using lease options. Last week, we talked about, if you didn't watch that already, let's go back to the YouTube channel. You'll find it there. But we will build on that here today. So these pictures here are just a small representation of a bunch of properties that I put together where I generated really great cash flow off of all of them without having to qualify for a bank mortgage and without having to put down 5, 10, or 20% of the purchase price. All these properties, I'm just doing a quick scan. Yep. All these properties I secured and then controlled with a series of contracts and a check for $100. So that check and those contracts with signatures on them made each of these deals legally binding and gave me control of the property. It's just a great way to scale because you can, what is there, 15? You can just keep on scaling. And it all started with one, right? Everybody talks about, how did you do so many? And it's like, it started with one. It started with one deal, get that one deal under your belt, and then you go from there. So that's what we're going to do. We're going to jump into the first deal. So structuring your first deal. We talked last week about, structuring it with an investor. So let me tell you about my first deal. So my first deal was this house. I had been investing for a couple of years. I had a couple of properties that were buy, rent, and holds, traditional financing, put down the deposit, qualify for the mortgage, all that sort of stuff. While I was doing that, I would just talk about it with people. What I realized after the fact was I was given an elevator pitch, basically telling about what I was doing, but not putting pressure on anybody, not even asking anyone, hey, would you invest with me? And I still never do that when it comes to people who I'm just talking to. Now, if it's an investor who's invested before, sure, I'll go to them and say, hey, I've got another deal. Do you want to invest in this one? But on this one, I was just going to the office and I was, coffee break Monday morning. Hey, what'd you guys do? Everyone kind of shares their stuff. I'd talk about my deals. So over time, some friends at work said, hey, we're interested in what you're doing. Like, it sounds really interesting. We have got no experience, but we've got some money. Could we invest with you? And in my mind, I'm going, wow, this is amazing. I have no idea how to structure this. But verbally, I said, sounds great. Let's do it. And so we figured it out. I presented a bunch of different homes to them, and I started telling them about this strategy. And this is a house I presented to them. So they ended up putting about $45,000 down for this house, and they qualified for the mortgage. We signed up all the paperwork. Then I controlled the property, and then I put a tenant buyer into the property. That's the rent to own strategy, where you put a tenant buyer, help them into home ownership. We're going to be talking more about that subject in the next 2 weeks. They were happy because the owners who put the money down, because they never set foot on the property. And I was giving them rent every month, and I was receiving rent every month. I found a great tenant buyer. The tenant buyer put down $20,000, gave that to me. I received, I believe it was $1,450 a month from the tenant, and I was paying the owner $1,200. So that's what you'll hear as a sandwich lease option, right? So a lease option is just your straight where you lease option your property. A sandwich lease option is what I call no money down deals. And that's where you've got, the investor on one side, like the owners of this house, the tenant buyers on the other side, and then you in the middle. And you're controlling the deal, you're running the deal, you're the managing partner, and you're making some great profit without having to qualify for a bank mortgage. And that's how I did my first one. That's how I got my first investor. And so it just kind of mushroomed after that, because these guys were so happy that bought that white house that, I think it was 3 months after that, not even, it was a month and a half after that, when I was rerunning all the numbers, making sure everything was good to go, because I was managing the deal. And I was like, wow, I got $20K up front. I'm making a spread of $250 a month. My investors are happy. We've got a good exit strategy for the tenant buyers. We're helping them get into home ownership. Why couldn't I do this again? Like, if this couple wanted to do that, I'm sure there's got to be others. And so we'll talk a bit more about that in a bit. The second way that you can structure your first deal is with what I call tired and frustrated landlord. So basically, it's someone who already owns a property that wants out of dealing with tenants. And they probably most likely want to sell. Not all of my TFLs want to sell right away. They're happy with what I'm about to tell you. And so this is a property that came to me through a friend of a friend. And the owner of this property was an absentee landlord, had rented it to a family for, I think it was 2 or 3 years. He didn't go back into the property once. If there was an issue, he sent, like a trade in there, but I don't think they had any issues. And so when she found out that, when he found out that she was going to be moving on from the house, he said, great, no problem. You've been a good tenant, you paid and everything. Let me just come by and just do a quick check-in on the property. Well, his heart sank as soon as he walked in the door, because it was uncared for. There was, the dogs ran the roost in there. There was scrape marks on all the walls. The doors were ruined from the dog's claws, and it smelt. It smelt bad. I mean, I was in there, and I don't normally wear masks when I walk through properties the first time, but this one was one of the worst smelling properties. And I mean, I could go into detail, but imagine all the different smells that you could have in a house. This one had it. So, you know what they say, the more it smells like shit, the more money you're going to make. And that was the case on this one. So he had a problem because he wanted to get rid of this property, but he knew he didn't have the time or energy or the skills to fix it up. He knew that if you put it on MLS with a realtor, the low ballers would come in and it would be less for what he owes on the mortgage. Once he paid for, the realtor and the closing fees, and then paid off his mortgage, he owed $235,000, and the low ballers would have come in on this property at probably $190,000, $199,000. So what we did is we structured a deal. We said, okay, here's what we'll do, because you go into a property, you assess it, you run your numbers. I like to come back to the owner with a couple different options. One is we'll buy it now price, here, or we'll do it where, and I don't necessarily say this to them up front, but it's a sandwich lease. But how I describe it to them is like, okay, here's what we'll do. We will rent it from you for $1,000 a month for the next 6 months. So that's covering his costs, his monthly costs. So that's problem number one that's solved for him. That's solved for him. Secondly, we will spend our own money and do rentals in the property to raise the value. So either you've got cash that you can do that, or you bring in another investor and you pay them a return on that, which is what we did on this one. Or ideally, you get this investor who already owns a property to put up the cash so that you can use his money or her money to do the rentals. So we said, we'll rent it for 6 months. We're going to do rentals. We didn't go into details up then. We did tell him what we're doing, but for the purpose of this, he's kind of going, okay, well, how does this solve my problem? You're going to rent it from me. I just want to sell. You're going to do rentals, and then we're going to buy it off of you. And we're going to buy it off of you at $235 in 6 months. So he's going, okay, so you're solving my monthly cash call, and you're going to look after the property. There's someone going to be in there like weekly, daily, looking after the property. So that's good. You're going to look after utilities, and you're going to buy it off me. So basically, all of his expenses are covered. Now, he's not necessarily making any money, but this was a fantastic deal for this seller because it solved their headache. So that was essentially a sandwich lease. So I did my contracts with them, all that sort of stuff. We did that. It took 7 months. We sold it on the open market. I think it was for $335, right around that mark. And we spent about $65,000 on rentals. So I won't go into details. We didn't do as good as we thought we'd on the flip, but it was a pure no money down flip. Yeah. So that's what we did in the end. We ended up turning around, just selling on the open market. There's so many different ways, for those of you who kind of, familiar with this sort of stuff. I mean, you can sell it, you can buy it yourself at the lower price and refinance it. You can sell it to another investor and partner with them, joint venture, whatever, run it as a buy, rent, and hold, blah, blah, blah. There's so many different things you can do. But for this situation, we essentially did a no money down flip, which is fantastic. We didn't have to qualify for a mortgage. We didn't have to put big money down that was from us, because you can't necessarily borrow 50 grand from someone else as your down payment, because the banks want to see where that money is coming from, and they want to see it in your account, for an aging process of 90 days, sometimes 120, or even 6 months. That's what we did on this property. And that is another way. So these are kind of, one-offs. You might be thinking, okay, great. I understand that. What's the next step in that? So the next step is putting together your next deals. For me, when I quit my day job, when I did that blue house, right, I quit my day job after that one, because I was like, I kind of jumped out of the parachute. Sorry, Spooner. I kind of jumped out of the plane and I assembled my parachute on the way down. I don't recommend that. I have jumped out of a plane in real life. Fortunately, the parachute was on my back already, had some training. But on this, when I received the $20K up front and the monthly cash flow, it's like I said to my wife, we did have a reserve fund, a backup chute that was already built and in place. I'm not that crazy. But I said to Holly, I said a lot, right? I need to stop that. We only need to do 4 more of these deals to replace my income. This took me about 6 weeks to put together my first deal. I got my checks 2 weeks after this. So 2 months in total for the first one. But now I know how to do it. Can I duplicate that? Absolutely. I took action. I built some momentum. I got a little bit more confident. And so we said, yeah, let's do it. So this one here was the next one that I did. This was in February. I got $13,000 down for that. And my monthly cash flow after my investor was paid was $350. Now remember, on all these properties, when I do these sandwich lease options like this, I'm working it out with the tenant buyer that they're responsible for the repairs on the property. I won't go into a lot of detail about that, but they're going to own the property. They need to learn how to do the property. So I give them what's called a new homeowner's manual that walks them through that. I get into the property, or someone from my team, at least 3 times a year, just to make sure they're doing stuff that they've agreed to do. And changing furnace filters, making sure your eaves troughs are clean, water's flowing away from the house, all that sort of stuff. So we're teaching them how to take care of the property. So the maintenance costs are virtually nil, which is fantastic. This is the second one that I did, which was in May. I got $10,000 up front from the tenant buyer, and the cash flow on that was $200 a month. This is the third one we closed in September, and I got $20,000 down for this, and the cash flow on this was $350 a month. Now you're starting to scale. You start to see, you started with one, because often if you're kind of like me, you can analyze stuff to death, and that is a problem for those of us who struggle with that, because we get bogged down with that stuff and we can't take action because it's like, oh, there's so much to do. But if you break it down into what do I need to do next, right? So your goal is to do one of these deals, or maybe it's your second or third one, but you want to do it better because you realize that some of your contracts weren't up to snuff. You realize that you got some bad advice, or maybe you had no advice at all, and you realize, wow, I structured that very poorly, and now I need to do it right, and I need to get it right so that there's success for everybody around the table, not just you, the investor. Because you're not going to stay in business very long if only you get success. I got to make sure my investors have success, and I got to make sure that my tenant buyers have success. You start to imagine, okay, I can duplicate this. And so that's what I started to do here. And I've shown you 4 now in that first year in 2010. And they were all with 4 different investors. Now, that's great. But it would be even better if I had one investor who said, I really like this. Let's do 4. So now you just got one investor to deal with. So here I've got, 4 investors I need to communicate with instead of one, but that's okay. I was scaling, and I was very happy about that. So that was with getting an investor in to purchase the property, putting the money down, qualifying for the mortgage. Now, the other one is where they already own the properties. And so, which is very much like the very first one. We ended up doing a flip on that house that I just went through a minute ago. This is a scenario that I did with one investor, and I've got lots of examples in this area. I've just picked these up because there's some great stories in here. And essentially what I did was started off with this first house. I'm pointing, but you can't see me point. So I met this guy. I'd never met him before. I'd heard about him. He was a bit of a legend in our community because he had so many properties. So when I got the chance to sit with him and pitch my idea of doing a sandwich lease option, I jumped at it and I pushed for it. So I sat down with him and I painted the picture in really basic terms. Didn't use sandwich lease. I just said, well, you've got this property that you want to rent out, and I think you want to sell it, right? Yeah. Okay. So would you allow me to rent it from you for 3 years, and then I'll buy it at the end? And he's like, okay, I'm familiar with that. This guy was actually familiar with that, so it made the rest of the process quite easy. But most people aren't. What I did is I start really basic, and then if they're interested, then I can build on that. I've got a video that talks about me negotiating with a for sale by owner. If you go into Creative Investor U on YouTube and Google that, FSBO or for sale by owner, I actually give you a live where I'm actually talking with someone, and I walk you through the steps in which you can talk to someone for the very first time, and you can just copy the dialogue and paste it and do it yourself. So long story short, he said yes. I had the paperwork with me. Another tip is be prepared. Have paperwork with you so that you can move quickly if you need to. Gave him the $100 check. 3 days later, I didn't know. Like, I knew he had more properties, but we just focused on this one. 3 days later, I got a text from him saying, "Hey Cam, I really like that arrangement. I've got 3 other properties. Are you interested in doing the same sort of structure?" I was like, yes. So I ended up doing approximately 23 with this person over the next 5 or 6 years. This is such an amazing strategy because what's happening is there is a demographic of people who are getting out of their portfolios of homes. And so, for example, one of the reasons why this guy liked this model so much is that he would systematically sell the homes. Because you know what happens if you've got 5, 10, even one, but the more you have, the bigger the problem this is. When you sell a property as an investor, you get a major tax hit. It's called a capital gain, and it just sucks all your profits out. But if you do only a few each year over a series of years, your tax burden is much less. The baby boomers are retiring. Well, most of them are retired or getting close to being retired. And those who have rental properties are, they're keeping them for a bit, and then they're starting to get older and going, I don't want this house anymore. They want a great exit strategy. This is a great opportunity. You'll be hearing more from me on that, on how to structure those. That's my TFL experience with scaling, right? So both of these examples, right? The 3 in this one that I showed you, plus the first one, and then the 5 pictures here and all the others, these are all me acquiring properties into my portfolio that I'm controlling, and I've got a legal interest in them, all by using $100 checks and a series of contracts. In that first year, my portfolio grew by, over 10 properties. Because that first one I did with the TFL, I think that was in November. And then he had the other 3, which we did early December. And I can't remember when we did the next one, but so it's 10 or 11 right there. Now you start building systems in place, and you can start to do this exponentially, because as one person, you can only take on so many deals. That's how you begin to scale without the banks. So I'm excited for this next part because, as I mentioned before, Dave's jumping on with us. So Dave's one of my students in my lease option course and community, who has taken massive action and is getting some great results. So Dave, I'm super excited to have you on here. Welcome.
Awesome. Thank you for having me here, Cam.
Yeah, you bet. So one of the questions that we often get is, how did you put your first no money down deal together? How did that look? Talk about that.
Yeah. So we had first got introduced to the rent to own program because we had a house that we tried to flip. We kind of underestimated some numbers, and we're looking at potentially taking a loss on it. So then we turned to the rent to own deal to actually make that a profitable deal for us. So we had one rent to own in our back pocket, and we're like, hey, this was awesome. Let's do some more rent to owns. And we had been discussing this with our realtor in the city, and he wound up introducing us to someone looking to sell their house that was previously a rental, but for this seller, they basically couldn't get enough money to pay off their mortgage. So after the introduction, we came in, we told them how the rent to own program works. In this case, we'd be doing a sandwich lease with this gentleman. And it was really, really cool because we turned what would have been about, he was looking at about a $30,000 loss, and we turned it into being a $5,000 profit for him after 3 years.
Okay.
And this was all no money down from us. We put $100 down for the option consideration, and that was it.
Wow, that's fantastic. So this guy went from a very significant loss to plus $5,000 because you guys came in and basically solved his problem.
Yeah, definitely.
Right. So, okay. So what did you end up doing with that property? Like, if you took it over and he made money, how involved was he, and what did you guys do with the property?
So, when we came into the property, he had been previously renting it out. His tenant had just left, and they left the place in a bit of a mess. They didn't like trash it per se, but it was well lived in, didn't really clean up. They broke like one window pane, that type of stuff. So, I believe on this one, the highest offer he had got kind of on the open market was 175. And we came in and said, look, if you do these few strategic renovations to clean the place up a bit, we can offer you 205 at the end of the rental term, which is 3 years later.
Mm-hmm.
And he had some family members who were in the construction business. So for about $10,000, he was able to do these renovations. And then after that, he actually moved out of Regina to another nearby town. So he's never even, I don't think he's even been to the property
Mm-hmm.
since. We just pay him rent every month. We turned around, put our own tenant buyer in there. And it's looking like a really good project for us and them, everybody all around.
Okay. All right. So he's a hands-free landlord, letting you guys, well, counting on you guys to look after his property and fulfill that exit strategy.
Yes, for
Yeah.
sure.
Okay. Very cool. And then
We've
the other. Mm-hmm.
sorry, Cam, we've actually used him as a reference
Okay.
for
Great.
some of our future deals when someone's, most people don't even know what a rent to own is,
Yeah.
or if they have heard of it, they have completely the wrong idea.
Yeah.
So when we're explaining it to people, they're like, well, okay, sounds good, but I don't know.
Mm-hmm.
Um, we often offer them to talk to our previous clients, and he's one of them, and he's always given us really good reviews.
Awesome. That's fantastic. And just going back to the first one. So basically, you guys had owned that property. You did a flip, wasn't selling for the price you needed, and then so you turned that uh, to a lease option with a
Yeah,
tenant buyer into the property. So did you end up refinancing once the tenant was in there?
we did. For that one, we had bought it cash with an investor.
Mm-hmm.
Um, and then we wound up going and getting a mortgage, refinancing it.
Mm-hmm.
We were still a little bit short to pay back the investor,
Mm-hmm.
but he actually agreed to leave the balance in the deal
Okay.
for a return, obviously. Um, so that one is essentially a no money down deal as well. There's none of our money left in that deal, and we paid him back his portion of his initial. He's getting the rest of it plus the interest actually we pay him interest along the way, and then when it closes, he'll get another chunk as well.
Very cool. Now that's kind of a modified BRRRR strategy.
Yes, kind of a little bit of the burrito, but with an
Yep.
investor in there as well.
Yeah, exactly. So for those who don't know what a BRRRR is basically it's a long-term strategy for rental properties, and it's a great way to structure them. But basically, you buy the property at as low of a price you can. You get in there and you do a whole bunch of renos, and then you put a renter in it, and then you refinance it. So you pull your capital out of the deal, and ideally, you now have no capital in the deal. So it's like a no money down deal now, but then so you keep that property for a longer period of time, maybe indefinitely. Some people do it indefinitely, and then you repeat, right? So once you pull your capital out, you've now got this cash that you can go find another property to do the exact same process again. Great strategy. Every investor needs long-term buy and hold rentals in their portfolio. But what Dave said with the burrito is a modification of that. And basically what it is where, because I think flippers, Dave, and I'd be curious to hear what you're saying on this. I think flippers are losing a ton of money, leaving a ton of money on the table because the flipping process is very transactional and there's a lot of fees because you've got vacancy, you've got higher insurance costs because it's vacant while you're trying to sell it. You got holding costs, right? If you're staging it, utilities, all that stuff, then you got to pay a realtor, right? What does that add up to? I mean, tens of thousands of dollars.
Well,
And,
I can tell you, Cam, this project for us, we were looking at kind of break even at best, and now it's going to be a $40,000 profit over a 3 year term.
right. So you're doing okay. So
That's the numbers
so
right there.
right, exactly. So as a flip, you're saying you may have broken even, and
Yeah,
that was included in a realtor.
correct.
Right. Okay. So, and lots of people will just say, you know what, learning experience, let's just sell it, let's move on. But you guys saw an opportunity there and you were like, hang on a second here. What if we did it, structured it differently, right? Problem solving. And you turned that flip that was basically a learning experience and no profit into not only a learning experience, but now you're going to get 40,000 additional,
Mhm.
and you've got no money into the deal. You
Correct.
you've restructured it as a burrito. A burrito is a buy, a repair, a refinance, and then rent to own. So that's what burrito is. BRRTO. And so you'll be hearing more about that. Actually, I think in 2 weeks we are going to be talking exactly about that. We're going to be doing a whole session like that on this. So Dave, when you think about, okay, so you talked about your first couple deals.
Mhm.
Great. So you started to scale without the banks essentially.
Yep.
So two questions with that. One would be, when did the light really shine bright, or the aha moment happen for you guys when you're like, wow, like we could do this over and over again?
Mhm.
And the second question is, how did you start scaling uh, without the banks,
Mhm.
in terms of not just doing like one or two, but like actually scaling?
Yeah, I mean, it was, I guess, shortly after that first, well, what would have been our second deal with the sandwich lease. Um, because we had no money down and we kind of did our due diligence, all the background work to get work out the deal with the owner, get the tenant in, and then we're cash flowing from there, and we have good projection of income and no money down. At that point, it was like, well, we really could do as many as we can, like, the money is not an issue. It's like, how many owners can we talk to, or investors? How many tenant buyers can we, how many showings can we do a week? All that type of stuff. Um, yeah, so it was just, it's I really like it because, yeah, uh, no money down is awesome, but it's also um, pretty low risk. And again, actually across the board, because the owner still owns the home,
Mm-hmm.
right? No matter what happens, he still owns the home if something were to go south, right? So
Mm-hmm.
that's a pretty good collateralized investment for him.
Yeah.
Um, you know, the tenant buyer would have kind of the most at risk per se, but their only risk is themselves, right?
Mm-hmm.
If they follow the plan, make the payments, don't do anything silly with their credit,
Mm-hmm.
with the background checks that we do, they will qualify for a mortgage. So if you are your only risk, I'd say that's a pretty good situation.
Yeah.
And then for us in the middle, I mean, no money down, right? So
Mm-hmm.
it's just our time
Mm-hmm.
essentially.
Mm-hmm. So have you continued to grow, to the point where you are literally scaling without the banks?
Yes. Our bottleneck now is the processes and the people to do more and more,
Mm-hmm.
right? Yeah, right now it has been my business partner, Kyle, and I doing everything.
Mm-hmm.
We actually just hired a virtual assistant to help with a lot of the administrative work, first contacts, responding to all the ads and stuff like that. So that's definitely going to help us. So yeah, so now the scaling is basically documented processes and then resources,
Mm-hmm.
either automation or staff.
When I think about this whole subject of scaling without the banks, I mean, a lot of people just are like, that's impossible. You can't do that, right? And so this is kind of one of those situations where, uh, lots of people who are just getting into real estate, like, real estate is such a massive, right? There's so many different strategies. I mean, we're talking about right now, we're talking about single family residential. Well, what about multifamily? What about commercial? What about, industrial? What about land development? The list goes on and on and on, right? And so this is kind of like we're just opening the window for someone to stick their head through and look through the window and go, holy smokes, this is a whole different world. And it's so different from what I thought I knew about real estate investing.
Yeah,
So,
it's so interesting. I remember when I first started listening to podcasts and whatever, just kind of trying to take stuff in, and people would always say that, a new investor, before they even have their first deal, is worried that, oh my God, I can only get 5 mortgages
mhm,
and then I'm stuck.
yeah,
And I remember everybody saying, like, well, don't worry about that, because once you get to that point, you're going to be in a completely different situation.
mhm,
Yeah. And here we are now, we have 10 active rent to owns,
mhm,
right? So we kind of just blew by that,
yeah,
and wasn't really an issue. And if it ever is an issue, there's usually at least one, if not two or three other ways to approach a deal.
yeah. What advice would you have for real estate investors who are trying to finding and structuring no money down deals?
Um, yeah, I guess just do your study and your learning and your due diligence so you understand what's going on, but then be confident in that, because the confidence is key. It'll get you moving forward to take the action you need to take. And then when you're dealing with a TFL or an investor,
Mm-hmm.
that confidence will show through and they'll be comfortable to move forward with you. Um, that's really all it is. Like, do those two things, as long as either you know your market well or have a realtor or someone who can give you accurate home values. Like,
Mm-hmm.
if you're accurate on the value of the home, everything else is just kind of semantics.
Mm-hmm.
You can all work it out.
Right. The details is what you're saying.
Yeah,
They'll work out.
it's
Yeah.
it's pretty mechanical after a point, actually.
Yeah. You made a statement that is, it's very true, but there's a bit of a chasm there that one has to cross, and that is going from I've got very little experience, talking with, tired and frustrated landlords. I've got very little experience talking with potential investors, and you're saying just be confident. Well, how does that happen? How do you cross that bridge to gain that confidence? What do you need to do?
Um, yeah, you get confidence by doing, right.
Mm-hmm.
Um, and until you have it, yeah, like you say, there's that chasm there, but like, get help, right?
Mm-hmm.
Get a coach or get another investor who does it in your area,
Mm-hmm.
and tell them, like, hey man, I want to learn.
Mm-hmm.
And like, just go, you can go do everything and then like give them the deal. You got to find either a coach or a mentor to help you along.
Mm-hmm.
And then you got to take that action and have someone to talk with and spur you on.
Yeah. Okay. Cool. So what I hear you saying is that to build that bridge to cross the chasm is basically about taking action. I mean, I think about my own experiences over the last decade, and even now. I mean, I still make mistakes, right? And you're going to make mistakes. And I think that's a big piece that people need to recognize. It's the same as when you're learning to ride a bicycle, you're going to make mistakes. You're going to make phone calls and you're going to not have any answers. But that's an opportunity for you to go, huh, that's a really good question. I don't know the answer. Let me get back to you.
Yep.
Then you go find the answer and you call that guy back. Well, what does that do? Right? The guy's going to go, oh, okay, well, that's really good. And then all of a sudden you're going to go, oh, I feel better about myself because not only did I learn something, but I followed up with this guy and this guy is more interested. So,
Mm-hmm. The other thing I've noticed that's very interesting, it's amazing how many people thank us just for making an offer or proposing
totally.
a solution, even if they're like, no, doesn't work for me.
Yeah.
But I've heard him say, is like, well, we called this other guy and like nothing, right?
Mm-hmm.
They didn't come out or they didn't show up or whatever. So it's like, yeah, make your offers, because
Yeah.
that's, then you also eventually you'll build steam, you'll get known. It's like, okay, if you call this guy, this girl, you're at
Mm-hmm.
least going to get an offer,
Yeah.
right? And then you might need to do 10 before someone says yes, but
Yep. It's so true. I've had the exact same thing. You're exactly right, Dave. If you are making offers, and of course, those offers, you got to make the numbers work for you, and you've got to have a back out clause because
Mhm.
you'll still do your due diligence. So you don't want to be caught with a bad property. But make an offer, and yeah, you gain tons of experience that way. Cool, Dave. I just want to say thanks so much for joining us. And if people want to reach out to Dave, they can do that as well in the groups that are going to be mentioned here just in a minute. Thanks so much, Dave. That was fantastic.
All right. Thanks, Cam. Thanks for having me.
Some great experience, some great life stories, and some great, really practical stuff to put into use. So I want to wrap up here, and I want to give you kind of 3 next steps. Off the top, I talked about, if you've got questions, we can do them in the chat. We have, if you've got aha moments, comment down below. I'd love to hear your thoughts, your questions. But 3 things that I want to leave with you. First of all, one is don't sweat the details. I talked about it earlier, getting frazzled with too much stuff. Dave talked about it, and Dave's an engineer. I mean, by trade, right? He quit his engineering job to do full-time real estate, doing lease options. And if Dave, an engineer, is saying don't sweat the detail, well, what more permission do you need if you've got a guy like that saying don't sweat the details? The details will bog you down. You need to figure out, you do need time where you map out the details, but then you need to forget about them and you need to go, okay, what do I need to do today? Do those, get them done, and then do the next day and then the next. It's like, how do you eat an elephant? All right, the second one is know that you can do this. In high school and in college, I did okay. I mean, college I did better because I was a bit more focused. I knew what I wanted. High school, I mean, I graduated with, I think, a C average. I would be excited when I got a C minus and I passed something. And, what I'm trying to say is you don't have to be a rocket scientist to do this, right? You got to figure out the basic math and you got to talk with people. And if you're nervous about that, don't worry, you'll get over it and you'll forget about yourself. And you got to take massive action. Those are really the key things that you need to do. So know that you can do this. If I've done this, graduating with a C, I've got my grade 12 transcript right here. If you wanna see it, let me know. I will show it to you. Thirdly, what's next? What can you practically do? Okay, so there's 3 things. First of all, it's all about learning. So I've popped up here 4 kind of next step videos that you could watch. And all you need to do is go to youtube.com/creativeinvestoru and you'll find these videos. So that's number 1. And these are all kind of stuff that we've talked about. It's kind of taking you to a next level. The second thing is you can join our rent-to-own real estate investing group on Facebook. And it's a free community. It's an open community. Where you can dialogue with others about doing lease option deals and rent-own deals and all that sort of stuff. So facebook.com/groups/rent-to-own real estate investing. It's that simple. So you just go there, answer 2 questions, and then you'll be entered into the group. And thirdly is to take action. That's a big thing. Dave talked about it. You'll hear me talk about that over and over again. This is so key because often what people will do is they will learn, but never take action. If you learned one thing, stop this video, and go take action on that one thing. That is key. That's how you learn. That's how you grow. That's how you gain confidence. Do that one thing now. Right after this, from the list that you made, some ideas will have popped into your head. You're excited about a couple of them. Go and take action. I don't care if you don't have the answers, you will figure out the answer. If it's a phone call, someone asks you a question, don't try to say, oh yeah, I know the answer to that or whatever. Go, that's a really good question. I'll get back to you. Hang up the phone, go figure it out. Jump into our rent-own community. Ask friends, whatever, figure it out. Do the work, then go back to that person, call that person back and give them the answer. Now you've learned something and you are able to learn something new, because if you don't take action and you watch more and more videos, you're not going to learn anything. It'll just be more data dumping in, but you're not, executing on it. It's kind of like sitting in a really nice car, leaving it in neutral and revving the engine. And you keep doing that. You're going nowhere and you're kind of burning out. So that's it for today. I look forward to seeing you next Monday night, and take action. Thank you.